But these guys are doing this right. This is the way I want to see the due diligence on the documents. This is what I like seeing on the fees. Some of these other platforms can be so absolutely scammy on their fees. Oh my God. I mean, if you look at it, I'm not going to knock it too bad because I think there's some new tokenization of real estate projects that are launching right now. I wanted to talk to you guys about them. One of them I'll do a sort of platform review. The other one I'm just going to casually mention right now. And that is called USP. They're going to have their own token. They're going to have a governance, a security token. They're going to have, actually, they have two tokens. The only reason I mention it is go ahead and look it up. I'll put a link right here to their website. It's for accredited investors only. So that limits a lot of people. I just wanted to mention that one. So if you're an accredited investor, you want to check this one out, I would take a look at it. I think what they're doing is pretty serious. I like what I see with what they're doing. So check it out. But like I said before, it was only for accredited investors. Now, the other one I wanted to talk about is a brand new kid on the block, and it's called Mogul. Here's the front of their website. Unfortunately, their domain they picked is .ooo. So it's mogul.ooo. That's not 000. That's what they picked for their domain? I guess so. So I think they're a brand new setup. I think they just got going in December. There's only a couple properties on the platform, but I wanted to show it to you because they're doing some things I like. I actually like the numbers on this real estate. So if you go to their LinkedIn profile for the company, you'll see right here they have 3 employees. And the guy in the middle, Alex Blackwood, I've seen his stuff. He's popped up on some interviews. He's running the show. I think he's the main guy. I don't know who these other 2 guys are. They have a YouTube channel, only has a couple videos. They do have a Twitter account that's pretty active, and they're actually pretty funny on there. They have a lot of personality, and I think that's what they're trying to bring to their company. That's kind of fun. I mean, they're not totally stiff and boring. So, you know, it is what it is, but they're not big. You can see right here, it's just these 3 guys. They're based in Washington, D.C. One of the things I like about Mogul is that you do not have to be an accredited investor. So it's open to basically anyone in the U.S., 18 and above. So they are fractionalizing and tokenizing the property. You're buying tokens on the property. They start at $1 a token. So that's sort of the buy-in. Of course, you're not buying $1. When you link yourself to the platform, you can pay for the Mogul tokens using just bank or credit card. I mean, you can use it using Visa or debit card. You can use wire transfer, or you can buy in with crypto. Right now, it doesn't look like they have a marketplace for their tokens, but they say there's a lot of stuff in here that they're talking about wanting to do in the future. They're adding in there that maybe in the future there's going to be commercial properties. Right now, it's just single-family residential. They're talking about having a marketplace. I don't see a marketplace in there for liquidity to be trading the tokens like other platforms like Lofty, but they mention it, and I think it's what they're planning. I think right now these guys are just barely out of the launch phase, so they've got a couple properties to check out. They do say there's a governance structure for making repairs and that sort of thing, so that's nice. The properties are held in an LLC, so when you have you own shares through the tokens are representative of the percentage of the LLC that owns the house that you own of the LLC. And the blockchain they're using is going to be Polygon. So there's going to be gas fees. That's a second layer solution to Ethereum. I kind of wish they were, well, I wish they were just using Ethereum, but the gas fees can be pretty high on Ethereum. So Polygon, you're going to have lower gas fees, and that's going to be important if you're going to have a marketplace to trade those tokens in the future. You want low transaction costs if these tokens are going to trade in the future. Now, the way Mogul makes money is they have a platform fee that they're charging when the property is put into the platform of 2.5%. And then it also says that they're taking a percentage of the property management. I don't know what that is in here. I saw their property management agreement on one of their properties was at 7%. So I don't know if they're adding it onto that. But in the marketplace for, smaller rentals like single family houses, I see property management fees are around 8 to 10% is common. It is in my market. I'm a real estate broker in Washington. If you're doing really good, you might get it at 7%, but I'll bet you they're adding a little bit of property management fee of their own on top of the 7% that they had on this property I looked at. But they're not doing an asset under management fee like other platforms are, and that's nice. Now, one thing I like about Mogul is they do use leverage, and that's important. If you're buying these properties outright, it's going to be harder to get a good rate of return if you're buying these all cash because of the fees and because of the speculative nature of real estate. If you can use leverage, then you're going to have a lot more of a return on investments magnified significantly in the future. So these properties on Mogul, they're buying them and they're leaving the mortgages in place on one of them, and they're low interest rate mortgages that they think they're assuming. That is awesome. That helps with cash flow because these are all rentals. Now, if Mogul goes out of business, they say that it's not going to hurt your ownership of the property because the tokens represent your ownership of an LLC. So I've seen this before on some other platforms. If Mogul went out of business, it shouldn't affect your token ownership. We'll just have to see if that actually happened if someone went bankrupt. Would the bankruptcy court actually look at these tokens as part of their assets, or would they recognize them as our assets if we're the owners? It's kind of up in the air, but these platforms usually have this as a way to, if they go out of business, to give us some security that we're safe in our ownership of this real estate. We'll see. So here's the two properties that right now they have on their platform. I think this Jomar one is the first one, and right now the Bowser Avenue one is the second one. We're going to take a look at the one here on Bowser Avenue. So what I like here, this lays out their sort of the rationale for the property. They have a video here of Alex. That's the guy I was talking about earlier. He talks about the deal, he talks about this investment rationale down here. He's not so great on these videos, but it's okay. Operational strategy. So what they're planning on doing from this property, and then some benefits of the property. That's just some blah, 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 blah. And then here's who their property management is. Okay. Now, then we go to the overview. It's just sort of an overview of the property itself. Here's the sort of the little identifiers of the features of the property, and then the description down here of the property. And then here, right here, it says this one has a 2.625 mortgage rate. That's the mortgage that's underlying this property that keeps that cash flow on this rental spot on. Then here's the little bit of market information about where this property is located. It's located in Dallas, so they have some information here talking about the Dallas market, rent growth, property growth, market rating. Then some investment information here. So obviously the big purple line here, 87% debt. So the equity here is what you're buying into. This is what they're selling, they're selling this equity portion here. That's what's tokenized. So 87% loan to value, that's the interest rate. This is how it looks on each property. They'll be providing this right here. So the offering amount of $107,000. They're saying 3% rent growth. Okay, this is future projected returns. Who knows what's going to happen with that? So process, this kind of explains where it is in this process. Like on this property, on the 13th of November, they did due diligence, looking at the documents. It was on the market. Actually, it wasn't on the market. I'll go into this in a second. This property had been bought a year before by the owner of the app called, his name was Alex. He was the one that bought it. I think he bought it in 21. And then he sold it to Mogul and the buyers, us, the investors, if we buy in. And he actually did it at the price that he bought it for. So trying to launch this platform, he launched it with a pretty good deal that they're looking for funders for right now. Now, I like this here a lot. They've got all your due diligence and all your documents, purchase agreement, the property lease that's in place, the LLC operating agreement, property management agreements, title policy, certificate of formation, the bylaws of the HOA, the home warranty coverage, great. This right here, if you want to take a peek at that, this was the summary of cash flow and returns on this property. It looks like their exit strategy right here is to sell this at $837,000, which would be a gain for the investment of $286,000. You can see that right here. So I did pull up the property management agreement, and it did say that the property management that they were paying this firm was 7%. And you can see right here, they're renting this property out for $3,850. But just up front, you guys, I can tell you, right, that's not a bad ratio, $3,850 on the rent to let's say $550 around their entry point on this price. That's not bad, especially if the underlying mortgage at 87% debt is at less than 3%. Like, never get rid of a less than 3% mortgage. This was like, what did I say earlier, 2.8%? That's crazy. So that's how this property can cash flow. I would actually look at buying in and buying some of this equity here on this deal. I think this deal is not a bad deal at all. I'm not necessarily recommending jumping into this platform, but these guys are doing this right. This is the way I want to see the due diligence on the documents. This is what I like seeing on the fees. Some of these other platforms can be so absolutely scammy on their fees. Oh my God. I mean, if you look at it, I'm not going to knock it too bad because I think Arrived is actually doing some really nice things. But if you look at Arrived Homes, their fee structure is absolutely outrageous. I really don't like that fee structure. I couldn't get away with, as a broker, selling a property to investors with the fee structure Arrived has. My license would get taken away. Whenever you look at these platforms, when you see a property on these, pull them up on Zillow. Just type the address into Google and then just look at the Zillow profile of the property, and you can see what these properties were purchased for. You don't want to see your investment dollar. Let's say they put on a platform, buy in at $385,000, and then you go and look on Zillow and realize that the platform put it under contract 3 months ago for like $290,000, and there's all those fees on top of that. You know, they have to get they want to also build in reserves, so they're going to charge that up front. I understand that reserves are important, but just watch the fees on these projects, you guys. Watch the fees. If you want to watch a video on a platform that does something just like this, that's established, that does have a marketplace, I would click on this link right here. If you've ever thought about wanting to do something where you can invest in real estate, but as a lender that's secured by real estate in the US, then click on this link and watch this video on Groundfloor right here.